After months of debates and discussions on when the US Federal Reserve would start cutting its interest rates, the central bank has finally delivered. On Wednesday, the Federal Reserve cut its benchmark interest rate by a strong 50 basis points. Now, ahead of this meeting, there was a debate whether the interest rate cut will be 25 basis points or 50 basis points. Eventually, the weaker jobs data that came in over July and August may have prompted the Federal Reserve to go in for the stronger 50 basis points cut. Now, after the meeting, Fed Chair Jerome Powell said that the US economy was in a steady shape, and he's hinted that the rate cut that the Federal Reserve has taken was in a way to maintain the US economy remain in that steady state. But the jobs data would have clearly been a worry for the US central bank. Now, the 50 basis point rate cut opens the door for other central banks to cut interest rates as well. Well, to be sure, the European Central Bank has already slashed interest rates by 25 basis points last week. Yesterday, ahead of the Federal Reserve Committee meeting, Indonesia Central Bank surprised with a 25 basis points rate cut. How are things looking ahead from the US perspective? Well, the pace of the interest rate cuts is expected to come down from the 50 basis point that it did yesterday to 25 basis points. But still, over the remainder of 2024, economists see the US Federal Reserve cutting rates by another 50 basis points. And then through 2025, another 100 basis points of interest rate cut is expected. So overall, by December 2025, US interest rates would have come down by around 1.5 to 2%. Back home, the central bank, the Reserve Bank of India, will be closely watching on these things as well. But will it go ahead and cut interest rates too? Well, there are two things to consider for the Reserve Bank of India. One is, of course, the economic growth, and India's economy has been on a strong footing. The other major thing that the RBI has been concerned about is food inflation. Now, the core inflation has been very well under control for the last several months, but food inflation has been a concern. Food prices have been extremely volatile throughout the last year. Although the good monsoon rains this year is expected to keep the food prices in control or bring down the food inflation, RBI will be closely watching on how that pans out. Now, speaking last week in Singapore, RBI Governor Shakti Kanta Das said that while inflation had come down within its tolerance band, there was still some distance to cover. So essentially, Shakti Kanta Das is hinting that the RBI will not rush and cut interest rates just because other central banks are doing so. The Monetary Policy Committee of the RBI meets next in October. Will it cut rates then, or will it continue to hold is something everybody will be watching out for. Now, Nomura economists led by Sonal Verma, their chief economist for India and Asia ex Japan, have said that the RBI could surprise with a 25 basis point cut in October. Their premise is that inflation has already been under 4%, and they are also seeing some downside on the economic front as well. And that is why their belief that the RBI will surprise with the 25 basis point cut in October. But broadly, economists opine that the RBI will continue to hold interest rates at current levels, and the earliest rate cut is perhaps possible in December Monetary Policy Committee meeting, or maybe the next Monetary Policy Committee meeting in the Jan-March quarter of 2025. Now, with the US Federal Reserve cutting its interest rates, there could be also impact on how the fund flows pan out. Now, with US dollar weakening after the interest rate cut and investors chasing higher interest rate, there is an expectation that the fund flows to emerging markets will improve, and there India stands in a good shape given its economic strength. So, will we see more fund flows coming into India is something that we'll have to watch out for. But clearly, that is a very real possibility. Now, if you look at past instances where US interest rates have eased, the Indian markets have done well compared to the markets back in the US. So, this time around, also the expectation is that the Indian markets will do well. To also be taken into account that Indian markets are already looking very expensive given the rally that the markets have seen over the last 1 year. Several sectors, especially in the small and mid caps, have rallied extremely over the past 12 to 15 months. So that is something which foreign investors will be clearly wary about. Also, there are geopolitical tensions around the world which also needs to be taken into account. For instance, the conflict in the Middle East and the ongoing Russia-Ukraine conflict could still have its say on how the global economy pans out. In the US itself, there is a very real concern that the economy could slip into a recession, and if that happens, that will have a wider impact on global economies, including India. So there are a lot of moving parts, and despite the US Federal Reserve cutting interest rates, as we discussed, RBI will not rush into it, and all of these moving parts will come into play when the decision comes whether to cut rates or not to cut rates.